It's that.
Hey, happy Thursday, everybody. Man, this week has gone by so fast, so I'm just like catching up, having a great day. I hope you guys are having a good day too. If you're just watching for the first time, this is our client update. We do this for our clients every single day. Of course, if you're watching, you're welcome to participate as well, but we like to update our clients on what the markets did for the day and how that affected their investments. So we're going to keep this going. You guys seem to love it. I get a lot of great emails on that. A couple little housekeeping notes here. The HSA accounts, we finally got that set up. We should have the website updated here hopefully by the end of Friday. So you'll be able to log in, get everything started from our website. We've gone right to the source. We're not working with a third-party company to offer this to you. We are going right to the major HSA provider that's out there. You can have a debit card for your HSA. You can allow us to actually make sure we're investing it for you. And because we're going right to the source, the very first dollar that you put in, we can invest in any funds that you want. There's no limits as to what we can choose from. So if you love Vanguard, you love all, any of them, Dimension, whoever you love, we can put you in that as well. So very excited. Just hold off a little bit. We got the guys working on the website here. Should have that edition. I'm hoping tonight, but we probably won't roll it out until tomorrow night just to be sure it's all working correctly. Stay with us there. If you're not a client of Jazz Wealth, you just want to open a retirement account, you're not interested in the HSA, well, that's what we do here. We manage retirement accounts, and we also keep our clients updated with everything we can. We'll even help you with your personal finances. Thanks to our good friends at Folio, you can now do the entire process. Just go to jazzwealth.com, click Invest Now, and we'll see when you join us there. We'll get to work for you and follow up with you. Let's go over to the stock market today because that's what we're really here for. So 5 days in a row. Here's the stock market. We've got the Dow up 5 days in a row, now recovering over 65%, I believe now almost 70% of the declines that we saw last week. If you're one of our retirement clients and you have 10 years left to go, does it matter, right? The markets are up 5 days. You probably didn't enjoy the drop going back here to last week or 2 weeks ago now, but you saw that as a discount. We had an opportunity. Everybody that puts money in weekly here got a chance to buy at a discount, and now you're starting to see the fruits of your stress. So doesn't really matter to you guys. If you are currently retired with us, well, we've positioned you a little differently anyways, but really the 5-day win streak here doesn't mean a whole lot. I still think we hold in this range. It's a wide range. I do not think we recover the entire move. If we recover the entire move, then I mean, the stock market, the economy must just be as good as humanly possible. That would be the most impressive rally I've ever seen, honestly. Going back as long as I've been doing this and as long as I've studied, this sort of fast reversal, if that's what happens, I've never seen that before. I don't think it's ever happened before. I'm actually very confident that it has not happened before. So we've got the Dow today up 300 points, S&P up 32, Nasdaq up 111. You see the difference there. We always talk about, is there one that's standing out? Yes, all the markets were higher today, but the Nasdaq outpaced the other markets, the other indices, by quite a bit, almost up 2% on the day. So you go, well, number one, why was that? And number two, did old Dustin at Jazz Wealth have me participating in that? If that was the best one, I want to be sure I got a part of that. And the answer would be yes. Tech. Tech was the big rally today. This is one of our holdings that you probably have in your accounts. It is, actually, that's not it. Sorry. Right here. This is your tech holding. So the tech, obviously, space had a good day. The Nasdaq had a good day. And that's how you know, oh, great, you participated in that. This one part of the market has almost recovered all of its gains. The reason why is because inside of this fund, you have the FANG stocks, right? So you have Facebook, which was only up a little bit today. The real excitement was Apple, up another 3.3%. Amazon, back to highs already, almost up 1% on the day. FANG, Netflix, I always forget. Netflix up over 5%. That's certainly helping your tech names get up there. And I didn't actually check on Google, but they had a nice day too, almost 2% on the day. So that shows that that's the reason why the tech portion of your portfolio did well today. If you happen to be looking at your account, again, one day doesn't really matter, but that's how you know, okay, we're doing the right thing here. The speed at which we're moving, whether you're aggressive or conservative, all is going well. What else? So that's the Nasdaq. Oil. Oil continued its rally. There we go. So you got on the screen, this is the oil futures market. We talked about this yesterday, starting to rebound off of that support area there. Let me just go briefly. I can't actually click on these things. I hate this. There we go. So here's one of your holdings here, the commodities related products. This is going to include oil. This is going to include gold, some gold and other commodities. But you can see it looks very similar to oil. So that recovering, looking good as well. Just wasn't a main focus. Nobody's really talking about that right now. Everybody's looking at the stock market going, wow, up 5 days in a row. That's exciting. So what else do we have here? Even the mid-cap obviously did well today. Even the REITs came back a little bit. Now, this is going to be an underperformer. We don't have a lot of exposure to this, but some of you that are participating in the REITs starting to make a comeback. Interest rate sensitive. It's not really the sort of the prime focus of what we do, but even that made a comeback today. So let's talk about some individual stocks. Not that they necessarily had a big move today. McDonald's was up 0.5%. They're getting rid of, almost getting rid of the Happy Meal. Really what they're doing is taking the cheeseburger out of the Happy Meal. So what's a Happy Meal if there's no cheeseburger? We're down to like fries and like a toy, right? So they're actually just trying to put some healthier alternatives in there. The actual the stat that they released, they want to have half of their Happy Meal offerings be at 600 calories or less by 2022. So 19, 20, 21, 22. 4 years it's going to take them to get half of the Happy Meal offerings to have 600 or less calories. This isn't like fuel efficient cars. I'm not sure why it's going to take so long to do that. They said that 30% of their orders at McDonald's are family orders, which include Happy Meals. So it was important to them that they blah, blah, blah. They want to make people healthy. Look, bottom line is if people want a cheeseburger, they're going to order a cheeseburger. If it's not in the Happy Meal, they're still going to get a cheeseburger. So I don't know what we're solving there. Leave me a comment below. Let me know if you disagree. One thing that I disagree with is a company called Fannie Mae. Fannie Mae lost 4% today. We don't have any direct exposure to this. This is just a joke. You guys, myself included, are about to pay this company to continue to operate. This company, if you ever want to study something really, really sort of shady in history, back in the financial crisis, what happened was they gave these guys how much? $187 billion because they were in big trouble. These guys don't actually do home loans. What they do is they take home loans from the mortgage providers, they put them in bonds, and then they offer them to Wall Street and hope that Wall Street takes them. Wall Street does take them because Fannie Mae guarantees them now. There's no chance that they could be any sort of risk of loss, a complete loss, I should say. Well, what happened is because of the tax laws, they found out, hey man, last quarter we lost $3.7 billion. No, $6.5 billion is what they lost thanks to the tax laws, or at least that's what they blamed it on. Well, now they're coming back to us and the Treasury, which is us, and they're saying we need $3.7 billion to continue. The Treasury's like, wait a minute, we gave you $187 billion. Fannie Mae's like, yeah, but we paid back $100 billion, so we kind of paid it back, right? Can we just get another 3.7? And it looks like they're going to do it. Back during the financial crisis, when we gave them the $187 billion, they did it while we were all watching, I believe, the World Series. I think that was the game that was on. They do these things in the middle of the night when America's looking this way. They gave him $187 billion of our money. So I think it deserves to be down 4% today. I think this company is a joke, and it's a shame that we have to fund them. And that's about as passionate as I get about stuff. Let's go on to something fun. Berkshire Hathaway, we'll look at the B shares. Berkshire Hathaway up 1.68% today. Everybody loves to know what Warren Buffett is invested in. Well, big companies have to report their investments, but we don't get to see them day by day. It's called a 13F. That's the form that they fill out, and it basically gets to show us the transactions that they made in the prior quarter. Well, some interesting things that happened. Berkshire Hathaway, or more popularly Warren Buffett, increased his stake in Apple. They reduced Wells Fargo. Very interesting there because Wells Fargo has been restricted by the Federal Reserve. Warren Buffett was like, I'm going to just back out here. They almost eliminated their, they reduced their Wells Fargo position. That was probably smart. They reduced positions in American Airlines. Not sure if I understand that one. General Motors, I get. And the most notable position that they reduced, almost eliminated, was IBM. This is a big position for them. They they've been very strong on this for a while. Their average cost is around 170. To give you an idea, I guess you can't see the price on the chart. 170 is right up here. So it's currently trading around 156. They basically said, all right, enough is enough. They almost wiped out their entire position. So that was a big focus today on that. In other news, what else do we have here? Just something interesting. Google, Google, not Alphabet. Google, stock was up 2%. We talked about that. They've decided that they're going to block ads that are not user-friendly and then put their own ads in place of that. Well, $3 of every $10 goes towards Google as their revenue, their earnings for putting an ad on there. So the assumption here is, wait a minute, you're going to block non-user friendly ads so you can put your own ads in there. That means you're going to make more money. Well, how convenient is that all of a sudden they've got a conscience and they're saying, look, we want people to see good stuff, so let's put our ads in front of it. It just means they're going to make more. So long story short, if you're an investor in Google, that's good news for you. I don't know, if you run ads or something that's not user friendly, then maybe not such a good thing. Okay, that's where I'm at. Check my notes here. We don't have anything else to cover for the day. I hope you enjoyed this. If you're thinking Jazz Wealth, then check this out up here. Watch these 2 videos. If you are a client of Jazz Wealth, we are working on the Wine and Wealth series. Come have a glass of wine with me while I teach you something you maybe never ever have heard before or never learned. That is almost ready to go, so I appreciate your patience on that, and we'll talk to you soon.